welcome back to the R3 podcast. I have good news and bad news for you. Let's start with the bad news. I am actually not the interviewer for this episode, which may be actually good news to some. The good news, however, is that you will be hearing from the R3 president himself, Tom Russell. How lucky are you? Today's episode is a live recording of an interview between Tom and Angela Crossley, Director of Strategy, Policy and Analysis at the Insolvency Service from this year's R3 annual conference in Malta. The interview covers how the Insolvency Service are evolving and changing to meet the different roles it now plays and how these impact on the profession. Like with all podcasts, it is important to stress that whilst care has been taken in the preparation of this podcast, it is intended for general guidance only and does not constitute legal advice. On with the show.
So, Angela, welcome. Thank you very much for coming and for agreeing to speak. Good to have you here. We've got a lot of points to cover, so let's jump straight in. The Insolvency Service has many functions, so the official receiver, the redundancy payment service, does the insolvency-related legislation for policy teams. Now, at R3, we get to see all the kind of things you do, but given the theme of the conference is change, did you want to just give us an idea of where you started and the evolution of the Insolvency Service and where it's going?
Well, yeah, the Insolvency Service has been around in some shape or form since the 1880s, actually. So the first ORs were appointed in January 1884. There were 67 of them back then, and the starting pay was the modern day equivalent of over £100,000. So things have changed because I think it's about 50 now. But if we take perhaps from the 86 Act onwards, really, the Insolvency Service was a network of official receivers' offices. In fact, it was called the Office of the Official Receiver for many years. And when I joined, there were probably a network of about 30 official receivers' offices. Over the last couple of years, we've really contracted. We've distilled down to 11 regional centres, an OR in each. Those centres are based for the convenience of our customers, not for our staff. We've streamlined our operations. So our official receiver operation has changed quite a lot, particularly recently. But the agency as a whole has changed a lot as well. So it's no longer the Office of the Official Receiver. It's a multifunctional operational agency. So we took on the Redundancy Payment Service in 2003, and that had various homes. It's probably better known to insolvency practitioners than some of our own staff, actually, because it's a multi-claim, bulk processing type operation where, as you probably all know, we deal with largely with claims from employees who've been made redundant. Because when we took that on, there were a number of sites for the redundancy payment service, and it was all manual processing. So, for example, when Woolworths failed, over 20,000 employees, we had to set up special teams to process all the claims. We've sort of streamlined that operation and using technology. Now, if there are big failures like Wilko, for example, a couple of years ago, we can process claims much more quickly. So with the Wilko claims, they were done in sort of less than 2 days. Strangely, it's easier to process bulk claims because you can do bulk uploads and do it much more quickly. We also took on in 2006 live investigations. That's had multiple homes. Government's had a company investigations type function since the South Sea bubble, actually. We took on live investigations in 2006, largely focusing on consumer scams, and then criminal investigations followed shortly after that. There's a whole new work stream coming our way through changes that were introduced in the...
Yeah, I was going to ask about the Companies House. So I think the Insolvency Service is taking on the Companies House enforcement following the changes to that legislation.
Yeah, we are.
So you're setting that up from scratch, that piece of legislation.
Yeah, I think it's really important and perhaps not so well known that in addition to taking on the work, we've actually got a new funding stream. That's really important for us. So the Economic Crime and Corporate Transparency Act fund our investigations through fees raised at Companies House. So until last year, our investigations were funded through spending review settlements by the taxpayer. So we had to bid for how much money we wanted, say up to 3 years ahead. The money we got was the money we got, and we had to cut our cloth accordingly. Longer term, we think that the fee income will give us a lot more flexibility. If cases go up enormously, we'll be able to fund them much more easily than relying on spending reviews.
So I suppose what type of volume and what type of cases are you expecting in that Companies House enforcement?
Well, we're now responsible for, I think it's about 290 of the 340 Companies Act offences.
Okay.
We don't know what volume we're going to get yet, but we're working with Companies House to come up with a process and look at case profiles and things like that. In the meantime, we're using the new funding to bolster our anti-money laundering capability. These new offences and the new economic crime focus has really made us think about where the agency should sit in the overall enforcement landscape.
So I suppose looking forward, you can see the Insolvency Service being more enforcement and moving from the official receiver duty. It's moving more, you're growing the enforcement piece.
We are growing the enforcement.
Are you recruiting for the new company
We
tax
are.
regime as well?
So we've recruited, or in the process of recruiting, about 100 extra people.
Okay, so that's significant.
It is, and that will be to deal with the new offences and also to deal with increased money laundering, proceeds of crime type activity. Thinking overall about a new enforcement strategy, which we will be publishing later in the year.
Okay.
And we think that there should be more of a focus on economic crime. That's not to say that the core work, the disqualifications, the live investigations is going anywhere, but this is a whole new work stream that we need to really work through and work out how we're going to work with Companies House going forward.
And you mentioned briefly the Redundancy Payment Service, and from a user perspective, we see that de-reportings are much more modern now, and the Redundancy Payment Service is obviously online. What are the plans for future uses of technology? And I suppose, are there any areas where you're thinking that technology, AI, for example, has been discussed a lot, might be useful and you might be looking to use?
Well, we spent the last few years spending quite a lot of money bringing what we've got really old laggard systems, really bringing those into support and up to date to give us a really good foundation for making best use of the technology as we go forward. So we're about to introduce a new case management system. We're just ironing out the final few bugs for that. That will really help our official receivers with streamlining their operation. But we've done an exercise to look at where we think artificial intelligence could really help our operations. We've got a great big wish list, which we've honed down to about 5 or 6 things that we just want to test over the summer. Some of those are internal facing, using generative AI to help with things like technical queries, fairly standard queries from consumers, and also HR. I don't know if you've heard with employee HR law is a nightmare. So our staff being able to ask questions about HR stuff. Most of it is external facing. So we're thinking about, could there be self-service customer portals, intelligent forms for HR1s and things like that?
Yep.
Better ways of vetting and identifying cases to take forward. So we're testing all those things over the summer, but I don't want to set hairs running, If we're going to put those in place, that's going to need money to develop them.
More organisations face, you need to look at how it can be used. And as I say, there's an AI session tomorrow when we look at that in more detail.
Yeah.
It's nice to know that the service is already involved in looking where it can help and utilising that.
Yeah.
I suppose moving to regulation for a moment, changes in relation to firm regulation or the compensation schemes or anything like that?
I would like to be able to say
Announce
more.
something here.
Yeah. I can't do that. So the policy, you know what the policies are, and they haven't changed, but they were announced under the previous government. The new government, well, it's not really that new now, is it? But it's wrestling with all sorts of things. We've had nothing from ministers to make us think that they don't want to take these proposals forward. But obviously, there's a lot of competition for their time and for parliamentary time. So what we've been doing in the meantime is working with the RPBs to flesh out, practically speaking, if we were given parliamentary time to legislate, what would it look like in practice? I think whatever noises the government make about regulation, what I would say is that what we think is that the insolvency profession is a really pivotal part of a strong economy. People want to know that if they invest here, their money's safe, and if the company fails, that's going to be dealt with swiftly, fairly, transparently, jobs saved where possible.
Well, it was interesting to hear from the Maltese academically that was triggered down the World Bank rankings, and that was impacting.
Yeah.
And I think that is something that building a globally recognised insolvency regime to the Insolvency Service in terms of those rankings.
The World Bank rankings, as I think most of you know, were dumped a couple of years ago because it turned out the Chinese and the Saudi Arabians were paying the World Bank to bump the rankings. But they have started a new survey. We've benchmarked us. We're waiting for our results for this year. We've done sort of a gap analysis with what the World Bank looks at and where we think we should be, and we think we should do pretty well. But what I would say is you can always get things left of field. So last time they produced their survey, we fell down the rankings. And the reason for that was one of their measures was the corporate lending rate. And we don't publish that in this country. So they used the household mortgage rate, which just completely skewed our results and was really, really annoying. And they wouldn't change it. So we might get something left to field like that. But there are other measures. So OECD did a survey of insolvency by jurisdiction, and our jurisdiction ranked first out of all the OECD countries. And it's not just a nice to have. There are really economic benefits from having a well-recognised insolvency jurisdiction. And I did seek the advice of ChatGPT, because it's quite difficult to work out, obviously, but when you break it all down, it's likely that the benefit to the UK economy of having an internationally recognised restructuring jurisdiction is probably in excess of £10 billion a year when you take account of all the ancillary benefits.
Sure.
So it's a really good thing, not just a nice to have.
And that's an important part of what the Insolvency Service does in terms of your policy, I suppose, because the government, as I said earlier in my opening remarks, has got the stated objective to try and get better and deregulate where it's unnecessary and cut red tape. So how far are the Insolvency Service involved in that policy decision, I suppose?
Well, I think you need to decouple the small insolvency regulation bit from regulation generally.
Yeah.
And really, I think at the moment, the government's primarily interested in the 17 big, what you'd call economic regulators. But that's not to say that obviously we're going to fall under the microscope a little bit. And how I would view it is that we need to make sure that our regime supports growth, which is a key thing that the government wants to take forward. So we're looking at all our policies and processes through the lens of, will this help growth?
Yeah.
And anything new that we put forward will be around that. And I suppose what I'd say is our role really is about making sure, reviewing the regime constantly to see whether it needs to be improved. So, for example, going back to the international stuff and the World Bank, one of the things where I think we may fall down is what we do specifically for small business. So, there are lots of insolvency processes, but is there something more we could do for SMEs? And that's something that I'd like us to look at, really.
Sure. Well, in terms of processes, evolving the current processes, do you think moving into new?
I don't know, but I think it's worth us looking. So what I've asked the team to do as a starting point is what's available at the moment.
Mm-hmm.
If you're a small business that gets into financial difficulty, what's available at the moment? And is there a gap that should be filled? So it's a fairly long-term project. But I think given that 99% of UK business is small business, it's worth looking at.
Yeah. And when we were chatting earlier, you were talking about the value of the profession survey that we've done before and we're looking to do again.
I know Caroline mentioned that, and I would just really like to say that if you're asked to complete the survey, please do, because we found it really, really useful at the Insolvency Service. We've certainly quoted figures from it about the value of the profession in terms of jobs saved and businesses rescued. I think that goes back to what I was saying before about how important the insolvency profession is to a strong economy, and having some refreshed evidence for us is really important as much as for yourself.
Sure. Well, as Caroline said, I think it just gives you can demonstrate the good we do and the growth and all that. And I think we need to be shouting about all that. And I think that's a really important part of what we're going to do. Just going back to Gen Z, for many of our members, the Insolvency Service is the official receiver. And you've already said the number of cases coming through from the official receivers has dropped. And many of our younger members won't have had a compulsory liquidation necessarily through the official receiver. How do you see that aspect of your work changing? And can you see bankruptcy cases going out disappearing as a result of the personal insolvency framework? Is that something that evolving?
Obviously, the landscape's changed. When I was appointed an official receiver, there were 80,000 cases a year. And last year, combined compulsory liquidations and bankruptcies, that we were hovering at less than 11. And the case mix has changed as well. So about half the cases last year were individual voluntary arrangements. Well, years ago, IVAs were aimed at businesses and people with complex affairs that you didn't...
Trading something.
that didn't want to go bankrupt. Now, nearly all personal insolvency is consumer-related, consumer debt. And we know from our looking at the personal insolvency regime that it's complex. The landscape is really complex. We know that people think that it's difficult to navigate, there isn't enough debt advice prior to going into insolvency, and there's still a big stigma attached to it. So we are looking at how we can streamline and make things simpler for the users. Most people that get into personal financial difficulty haven't really done much wrong, and they haven't got much in the way of assets. And what you need is a regime that's going to deal with the bulk of people. But you don't want to disenfranchise creditors, and you still want to be able to capture people that have been deliberately reckless with other people's money. And also there's a big question over how the regime should be funded. If you're bankrupt, it costs you hundreds of pounds if you want to go bankrupt. So we need to do quite a lot of analysis to work out how you can bring all this stuff together and make it fund itself without extra onus on the taxpayer, without making creditors get less. So I'm conscious that we've been really quiet on that, but that's because there's a lot of work going on in the background to sort of flesh out what it could look like. I think, come what may, there is always going to be a need for something that deals with people in debt as a last resort that haven't got anything and no way to pay for it. And there's going to be a need for the insolvency profession to deal with those cases that have assets or are complex. But outside of that, I don't really know where we'll end up. I don't think we should restrict ourselves to bankruptcy because, thinking about the stigma that's attached to personal insolvency, bankruptcy is quite a judgmental phrase. It's got its roots in Victorian times, and people used to be hung for fraudulent bankruptcy. Well, that doesn't happen anymore. If you've got something that actually helps people deal with their debt, gets the money back to creditors, you don't need to call it bankruptcy.
And I suppose you just mentioned fraudulent bankruptcy. I suppose distinguishing between people who are unfortunate and may not have anything wrong, and also criminal bankruptcy, I suppose. Is that something that you're looking at all?
Well, we've tried. So when the Enterprise Act came in 2004, that's when bankruptcy restrictions orders were introduced. And the idea of that was to distinguish between people who'd been deliberately fraudulent or reckless and people who were really unfortunate. But it just hasn't worked, really, because whatever happens, if you have a personal insolvency process, your name gets put on the credit reference agency for 6 years. And it doesn't matter whether you're a builder that's broken your back and can't work or someone that's filched a load of money off someone. So we are looking, and it's a really difficult question, but we are looking at how you can reduce the stigma for the vast majority whilst making sure that those that should be answerable stay answerable.
It's a real opportunity, the personal insolvency framework, to get it right. And I think taking time to really consult and get it right could set us up going forward.
Yeah.
Something our three have been doing a lot of work on, I know, coming already and going forward.
I think it's a great opportunity. We did a call for evidence a couple of years ago, as you know. We had some really good, thoughtful answers to that, but a lot of it was opinion, not evidence. And it's a big deal to upend something that's been around for decades. We can't just put forward some proposals to say, well, we think it should be like this is the answer. Without all the underpinning, what would be the impact of doing X, Y, and Z, and what would be the unforeseen consequences. So it is going to take a while to work through.
Sure. We just heard from the Maltese guests about their new insolvency regime. How important do you think it is for the Insolvency Service and all the wider profession to understand what's going on internationally? Are many other countries introducing regimes based on the UK's frameworks? And I suppose if we're still in 1986, how are we not left behind? We've heard of new regimes being brought in here pre-administration.
We aren't being left behind. So, we've got the Insolvency Act 1986, but for example, restructuring plans were introduced at the start of the pandemic. So we do constantly review the regime. And we are part of the United Nations International Commission on Trade Law. So we send someone off to UNCITRAL meetings. There's someone going to, I think it's either Vienna or New York in July. I can't remember which one. So we have a seat at the table there helping to introduce new model laws. There are two which I would have wanted to introduce before now, but they've turned out to be a lot more complicated than we thought they would be. There's a lot of wordage. And also the process has changed a little bit. So we want to legislate for Scotland. You used to be able to get that agreed by letter. You now have to get the Scottish Parliament to agree. Okay. So to cut a long story short, I'm hoping that in the next year or so, you'll see some movement on that. But we'll be the first to do that.
Yeah.
And I think it's important. Some people have said, why would you do that? Because no one else will have it. But for me, it's saying the UK's here. We're at the forefront. We're innovating. Come here.
Yeah.
Come and do your business here.
Absolutely.
We do devote specific resource to keeping our eye on what's going on across the planet. We're members of the International Association of Insolvency Regulators, which is a network of government regulators, mostly from civil law jurisdictions. We get together every year to talk about what's happening in our own jurisdictions and compare notes. And we have got someone that keeps their eye very much on the pulse to say, because I want to be first.
Yeah, absolutely. Yeah, you get your name on the... So anecdotally, the practitioners are finding, I've spoken to them, I am one, that the Redundancy Payment Service are questioning and rejecting more claims from directors in their capacity as employees, obviously. Has there been a change in the RPS position on those things?
Well, somewhat. So actually, the mix of directors' claims to employees' claims generally has fallen. It used to be about 12%. It's now 8%. But the case mix has changed in the last couple of years. We've got a lot more small, what you'd call incorporated sole trader cases than we used to have. And 2 or 3 years ago, there was an attempt, there was a fraud on the Redundancy Payment Service. So there were some claims put in where it turned out that the employees were fake. And it was an organised crime attempt to extract a lot of money from the Redundancy Payment Service. We detected it quite early, but not before we lost some money, taxpayers' money. And it made us think about the way we look at claims. And I think with directors, if you want to set yourself up as a sort of an incorporated sole trader in the most financially beneficial way to you, which might mean that you're not actually an employee, you're not paying your national insurance contributions, you can't have your cake and eat it. And when your company fails, then should you be able to claim from the redundancy payment service? Actually, the law only allows you to claim if you're an employee.
Yeah.
So we are looking more closely at directors in those sort of entities to see if they're employees. We're looking at P60s. Have you got a contract of employment? Are you paying yourself the national minimum wage? All those sort of things that will indicate whether you're an employee. If you're an employee, you'll get paid.
Yeah.
If we think that you haven't met the threshold to be an employee, we'll reject the claim. You can go to an employment tribunal if you want. So yes, we are giving those cases more scrutiny, but that's the background.
And we've had cases where the directors have paid themselves as an employee minimum wage and then claimed for 40 hours a week. So they've claimed up to the tax allowance and they've said they're working 40 hours a week, which is obviously illegal because they're working below minimum wage. In terms of that, can there be any more thorough guidance, I suppose, for directors when they're interacting with the RPS to encourage them to think about more thoroughly whether they are an employee, whether they should be making a claim at the early stage rather than going through the process and getting rejected?
I don't know what guidance is out there. I don't know if you do, Justin.
It's about ensuring that those entitled to redundancy can claim it and get it. We did have a high incidence of director claims, as you mentioned, a few years ago. And if they're employees, then that's absolutely fine. But we did tighten up the process around accepting or rejecting claims. As Angela mentioned, you can go to employment tribunal, and we've had a number of these tested at employment tribunal and have won the majority of them, not all of them. One of the big factors is minimum wage, which is something that you mentioned. That's not the only factor. In fact, we have had cases go to court where they've been paid below minimum wage and have still been accepted as employees. So this is all about protecting the public purse and making sure that you're entitled to it before you can get it.
I think we've probably got some time for questions now. If you have to take some questions. First question. The Insolvency Service has expressed an intention, I'm reading this, I don't know it to be a fact, to provide creditors voluntary liquidations. Are you going to be recruiting staff with the necessary experience, or are you not expressing an intention to do creditors voluntary liquidations?
It's news to me.
Okay, so that's not, there's no intention to provide creditors voluntary liquidations. That's good. Breaking news.
There was a question on there about enforcement.
Yeah.
We do think that there should be more of a focus on economic crime, like I said. Some of the other things that we're looking at are Phoenix, which Caroline alluded to this morning. A lot of you will know that there was a parliamentary hearing about that a while ago. I do think that there are differing ideas about what Phoenix companies are, but we have committed to working more closely with HMRC and Companies House to try and share data and deal with that. I think Caroline's right that actually most of the problems are sat in dissolved companies.
Yeah.
Which comes round to some of the new powers we've got, I think, from Companies House. Also, something else that we're doing is looking at disqualification generally. Just thinking about, it's 40 years old, it's kind of one size fits all. If you get to court, it's really expensive for everybody. Are there things that we can do to bring it up to date? Yeah, and also working with the Home Office more to combat sort of employment law type transgressions, so modern slavery and immigration, those type of things.
The question here is AI will disrupt most professions, including our profession. Will the service be working with R3 and the RPBs to explore the effects? So you said you're already looking into it. Is that going more widely? Sharing data is interesting.
Yeah, so what I talked about before was the Insolvency Services operations. I'm very conscious that AI is evolving so rapidly. There are a couple of things we need to do, and I'm not sure how to yet, but one of them is to make sure that the insolvency legislation keeps pace with the changes in technology, because it's living memory that we were allowed to receive electronic signatures. So we need to make sure that whatever legislation we've got in place doesn't inhibit people using AI. And the other thing is, how do you regulate that? And that's something that we've already started talking to the RPBs about.
Yeah, absolutely. When are the rules going to be updated to address all the issues R3 provided in the court of evidence some time ago? So is there a timetable for that?
I can't remember the details of the timetable, but we are hoping to do a first tranche later on this year.
Okay. Yep.
Hoping to.
And you can't guarantee all our changes will be brought into it, presumably.
No, but no, I'm conscious that some time has elapsed, but it's not through want of trying to get it done.
Absolutely. And a change of government presumably doesn't help the timetable, as you said, in terms of bringing stuff in. Helping SMEs in restructuring requires an engaged and commercial HMRC. Do you have any influence over HMRC in that regard?
Our influence with HMRC is improving, I would say. I mean, you all know what a big, complex organisation HMRC is. And for ourselves, as much as anyone else, it's quite difficult to pin down who you need to talk to. I've recently started having regular dialogue with people at HMRC, as have a number of other people at the Insolvency
And
Service.
all three meet with them regularly. Ben and the team, they do meet with HMRC and they discuss live issues. And I think our three are finding, from my knowledge, that we are able to engage in and speak to people.
Yeah.
Oh, there's an interesting question at the top about bounce back. The average length of a director disqualification increased hugely when we were looking at bounce back loans. Has this been worked through, I suppose? And is the political focus back to growth? Will the staff be redeployed? You were talking earlier about fraud as well as being a government.
So there is still quite a lot of bounce back loans in the system, but you'll know that CVLs the amount of CVLs has been at an all-time high. So needless to say, that means that trickles through to the number of investigations waiting to be looked at. So they may be redeployed from bounce back loan work, but they're not going to be redeployed out of investigations.
Okay.
There's always a lot of investigation work to do.
I suppose as those come through as a renewed focus on the investigations, you're quite particular about bounce back loans. Is it moving to another area or is it just as they come through?
I can't tell you what area that will be, but it was a government priority, was bounce back loans. You know, the taxpayer's been ripped off. That's where the focus has to be. But we've got a prioritisation tool that we use, and our enforcement strategy will tease out where we think we ought to focus going forward. And also, we do every year what we call a strategic assessment of threats on the landscape and where we think resources ought to be targeted.
Yeah.
And like I said earlier, a lot of that is around economic crime.
Yeah. Which is, again, the government have mentioned in terms of that, they want to crack down, as they would. I suppose that what the Insolvency Service and the profession can do to help on that is important.
Yeah.
And the clock's been flashing like mad for a while. But we've probably got one more question and then we can have a break. There's an interesting question. Does Angela think that are there any specific things that the profession should be doing better in the UK? So what should we be doing?
Right, okay. So I'm not going to tell you how to do your jobs.
No.
But what I do think the profession could do is expand on the work that we've been doing with R3 to encourage new people to join the profession. And I would really just like to finish off by saying that the people this morning that spoke for the class of 2025, I thought they were really inspiring and quite moving, actually, and they should be really proud of themselves. And I think if you could get those stories out more widely than just this conference room, that would be really helpful. So I think getting proper career structures in place. We do a lot of outreach work with universities, telling them what great work insolvency offers, all the different things you can do. And then when students ask about how they get into insolvency, we just say, well, look on LinkedIn or, look on Insolvency Insider, Google job adverts. And I think the profession could do quite a lot to advertise itself actually as a really great career for somebody.
I've been speaking to Tim Cooper, my predecessor, on this, and we've discussed it as an accounting qualification. I think insolvency was a small part of one module, and I think it's the same with law. And it's a huge area of law and it's a huge area of accountancy. And I think maybe more can be made that when we speak to universities, etc. But I think we better wrap up. So thank you so much for coming in and speaking to us. It's been fantastic.
And that's a wrap. Thank you for listening. A huge thank you to Tom and Angela. Should any members wish to be a guest on the R3 podcast, please contact me. My contact details are on the R3 website, or simply message me on LinkedIn. Keep well.